Hi, I'm Brian with Maker Real Estate, and this is your Twin Cities real estate update for the week of June 8th, 2020. Last week, I talked about how supply and demand are keeping sales prices on an upward trend in spite of the COVID-19 pandemic, and I got a question about how low mortgage rates might be fueling that trend. The answer is mortgage rates have a definite impact because they affect buyers' purchasing power. A common thread among people talking about real estate is that they don't understand how people are still buying when home prices are accelerating more quickly than incomes, and it's a really good question. The answer is purchasing power. Let's say you can afford a principal and interest payment of $1,500 per month, just to use round numbers. If interest rates are 5%, you can comfortably afford a 30-year loan for $279,000. If interest rates fall to 4%, that same $1,500 per month will get you a loan of $314,000. So even if in that same time period your income hasn't increased by much, that 1% decrease in loan rates has increased your purchasing power by $35,000. Let's look at the average interest rate for 30-year fixed-rate mortgages since 1971. Notice that they've been falling more or less continuously since the early 80s. When I first got in the business, we thought anything under 4% was an incredible rate, and it still is, but rates have fallen to the low threes. At the 3.18% average interest rate on a 30-year fixed-rate mortgage recorded by Freddie Mac last week, your same $1,500 monthly principal and interest payment will cover a $348,000 loan. Want to hear something crazy? Compare last week's rates to the end of 1981 when I was just a toddler and interest rates were north of 18%. If rates were 18% now, your $1,500 per month principal and interest payment would only get you a $100,000 loan. Let's look at last week's numbers for Hennepin, Ramsey, and Anoka counties. The median sales price for closed sales between May 30th and June 5th was $310,000, up 3.33% from the same period in 2019. The median list price was up 1.67%. Homes sold in a median of 17 days, 2 days slower than the same period a year ago. Last week, when I did this update, we had 623 pending properties with a projected close date of this week, but only 462 of those properties actually closed, meaning we didn't improve from the 50% we were down in closings last week. In fact, we actually fell to 57%. It's hard to tell from the numbers whether those were deals that fell apart completely or simply had their closings delayed for one reason or another. Time will tell. Our projected closings for next week has improved since I ran the numbers last week, so I suspect that at least some of them have been pushed back. If our projected closes for this coming week holds, we'll be off only about 15% from the same period a year ago. See you next week. If you want to keep up to date with the Twin Cities real estate market, please like Maker Real Estate on Facebook and subscribe to us on YouTube.